Welcome back to the channel, or welcome to the channel if it happens to be your very first time here. My name is Troy, and if you ever find yourself in the market for some high quality dividend stocks, then you're in luck. This series that comes out right here on my channel every single Friday at 8 a.m. Central Standard Time is going to feature 5 dividend stocks that all have ex-dividend dates of this coming week, and what that means is you're going to get paid from all these companies sooner rather than later. Now, if you also happen to enjoy stocks that outperform the market over a longer period of time, have low payout ratios, and high dividend growth rates, then let's go ahead and jump right into number 5 on this week's list, which is Moody's, stock ticker MCO. Including today's video, this is now the 3rd time I've spoken about Moody's right here on the channel, and if you go back to the very first time I spoke about it, on August 12th of 2022, Moody's is outperforming the S&P 500 since then, so let's go ahead and look at the numbers behind this stock. Moody's is a quarterly payer in the financial sector, paying $3.76 per share per year, with a forward dividend yield of 0.72%. Moody's has been paying and growing their dividend over the last 15 years. They have a 3-year dividend growth rate of 11.1%, a 5-year dividend growth rate of 11.2%, and a payout ratio of 23.93%. Now, at the time of recording, Moody's was only trading 1.71% off of their 52-week high. They have an ex-dividend date of February 25th with a payout date of March 14th. And looking at this chart, over the past 10 years, Moody's would have taken a lump sum $10,000 investment while only reinvesting the money they gave you in return and turned that into $59,137.31, which outperforms the S&P 500 by $24,555.49 in the same 10 years. Next up on this week's list and coming in at number 4 is Griffin, stock ticker GFF. Now, with the mention in today's video, this is now the 4th time I've spoken about this stock right here on the channel, and if you go back to the very first time I spoke about it, which was just this time last year on February 23rd, Griffin is actually underperforming the S&P 500 over the past year, but I like this stock long term, so let's go ahead and look at those numbers. Griffin is a quarterly payer in the industrial sector, paying 72 cents per share per year, with a forward dividend yield of 0.93%. Griffin has been paying and growing their dividend over the last 14 years. They have a 3-year dividend growth rate of 24.06%, a 5-year dividend growth rate of 16.59%, and a payout ratio at just 10.85%. Now, at the time of recording, Griffin was trading 10.8% off of their 52-week high. They have an ex-dividend date of February 25th with a payout date of March 18th. And again, we have the same chart here. Over the past 10 years, Griffin would have grown that $10,000 investment into $67,275, which outperforms the S&P 500 by $32,693.18. Next up is the first one on the podium this week. Coming in at number 3 is Murphy USA, stock ticker MUSA. Today's video marks the 3rd time I'm speaking about this stock right here on my channel, and if you go back to the first time I spoke about it, which was August 23rd of last year, Murphy USA is actually underperforming and has actually lost money since I first mentioned it, but I'm looking at this one as an opportunity, and I want to show you why. MUSA is a quarterly payer in the consumer discretionary sector, paying $1.96 per share per year, with a forward dividend yield of just 0.4%. Murphy USA has been paying and growing their dividend over the last 5 years. They have a 3-year dividend growth rate of 19.85%, and they don't qualify for a 5-year dividend growth rate because they've only been paying that dividend for the last 5 years, but their payout ratio is super sustainable at just 6.82%. Now, at the time of recording, Murphy USA was trading 13.22% off of their 52-week high, which is why I believe this one's at an opportune time to review for possible addition to your own portfolio. They have an ex-dividend date of February 24th with a payout date of March 5th, and looking at this chart over the past 10 years, Murphy USA would have grown that $10,000 investment into $70,570.21, which outperforms the S&P 500 by $35,988.39. With that being said, we're a little bit over halfway through this week's video, and if you guys haven't already, please take 1 second to leave a like on the video as it helps me out a lot. If you guys want to help me out even more, use the comment section down below to let me know what you guys think of this week's list list if you own any of the stocks on this week's list, or you can just use it to say hello. But now let's get to number 2. Coming in second place, earning the silver medal on this week's list is KLA, stock ticker KLAC. Now, with mention in today's video, this is now the 6th time this stock has been on my channel, and if you go back to the very first time I spoke about it, which was November 11th of 2022, KLAC is outperforming by nearly double over the S&P 500, so let's go ahead and look at those numbers. KLA is a quarterly payer in the technology sector, paying $6.80 per share per year with a forward dividend yield of 0.91%. KLA has been paying and growing their dividend over the last 15 years. They have a 3-year dividend growth rate of 15.77%, a 5-year dividend growth rate of 14.31%, and a payout ratio of 20.75%. Now, at the time of recording, KLA was actually trading 16.24% off of their 52-week high. So again, possibly another opportunity here. They have an ex-dividend date of February 24th with a payout date of March 4th. And looking at this chart, over the past 10 years, KLA would have turned that single lump sum $10,000 investment and the money they gave you in return into $142,705.54, which outperforms the S&P 500 by $108,123.72. Which brings us to the number 1 stock that I feel the most strongly that you guys must know about going into next week, and that's Kinsale Capital Group, stock ticker KNSL. Including today's video, this is now the 5th time I've spoken about this stock right here on my channel. And if you go back to the very first time I spoke about it on February 24th of 2023, KNSL is actually underperforming over the short term, but wait until you see these numbers over the longer term. KNSL is a quarterly payer in the financial sector, paying 68 cents per share per year with a forward dividend yield of just 0.15%. KNSL has been paying and growing their dividend over the last 9 years. They have a 3-year dividend growth rate of 10.9%, a 5-year dividend growth rate of 13.4%, and a payout ratio sitting at just 3.21%. Now, at the time of recording, KNSL is trading 18.07% off of their 52-week high. They have an ex-dividend date of February 27th with a payout date of March 13th. And looking at this chart, please note this is only a history of 8.55 years. But over those last 8.55 years, KNSL would have turned that $10,000 investment into $251,249.51, which outperforms the S&P 500 in the same time frame by $218,797.19. So to start off this video, I told you guys that every single stock in today's video was going to have an ex-dividend date for this coming week, which means you're going to get paid sooner rather than later, assuming any of these stocks are right for your portfolio. One of the important things to remember is that I put these videos out when I do, which is Friday, 8 a.m. Central Standard Time, which is 30 minutes before the open of the market, because I want you guys to be able to look into these stocks and see if any of them are right for your portfolio, because every single stock in today's video happens to be a quarterly payer. So if you guys missed that ex-dividend date, you now need to wait 3 long months before you get paid from any of these companies. And Sweet Brown says, ain't nobody got time for that. Now, with that being said, you for sure already missed the ex-dividend date for every stock I mentioned last week. But if you're in the market for 5 more high-quality dividend stocks and you happen to miss that video, you can check that out right here. But until next time, see ya.